All right, I'll get started. And while I'm giving introduction, people joining in, feel free to drop in your name, your organization name in the chat. Good afternoon, everyone. Thank you for joining us for this panel discussion on a new model for community investment. Property ownership and the wealth building benefits enjoyed by property owners have been historically kept out of reach of communities of color by design. And with widening income disparities and wage labor gaps, home ownership has become increasingly unattainable. Patterns of externally driven investment into neighborhoods of color have compounded such trends and contributed to pervasive gentrification that dispossesses communities from the value they created themselves. With an impending housing crisis, a rethinking of our current housing and community investment paradigms is essential. With this as the backdrop, the panel discussion today aims to showcase and provoke alternatives to the rent versus own housing paradigms. We will be using Nico, a neighborhood investment company that makes it possible for people who love their neighborhood to build a long-term financial stake in their community by investing in local real estate as the lens through which to explore, provoke, and reimagine what is possible, particularly within a broader system of land commodification and capitalism. I'm Priyanka Jain, and I'm excited to moderate the most amazing panel here, comprising of the Nico and 3x3 team, as well as experts on housing and community development based in New York, all of whom have worked on the new model of community investment that we will discuss as either a core team member or in advising capacity. I'll start with Max Levine from LA. He's CEO of Nico and has worked in real estate investment and the hospitality industry for 15 years, including as CFO of Storage Deluxe and a principal of Mile End Delicatessen in Brooklyn. We have Meghan Marini from New York, Principal and Director of Strategy and Outreach at 3x3. She has over 12 years of experience in system thinking and urban development. She is one of Nico Eco Park rate directors and advises Nico on its impact in the community. She is also taught at GSAP and New Jersey Institute of Technology and is one of the core members of Climate Collective. Justin Garrett Moore, the Executive Director of Public Design Commission at New York City Design and CEO and Director at Urban Patch. He's on the advisory board of Nico, where he provides general advisory services and mentorship related to urban policy, planning, design, civic engagement, community development, and other relevant topics. And Helen Leung, planner and policy wonk, leading a community development nonprofit in LA called LA Mass. LA Mass works with working class communities of color on issues of affordable housing, economic resilience, and community ownership. Helen's work is inspired by her own working class immigrant roots. She also serves on the city's planning commission. With that, I'll start the panel discussion and direct the first question to Max. Max, what insight prompted you to investigate a community investment model, and how is this model different from others in the landscape?
Yeah, great. Well, first, it's a pleasure to be here, and it's a pleasure to be with everyone on this panel. Very excited about this. And I would say, Nico is very much sort of trying to speak to, really the force that, large-scale, typically market-oriented capital has had on communities. And we sort of feel that one of the great sort of untold stories of gentrification, of neighborhood change, is the institutionalization of the real estate industry and the sort of scale of the capital flows that have moved into real estate and by extension into communities like Echo Park and like other neighborhoods all over the country. And so we really sort of set out to create an example of a model where that type of capital flow, instead of being sort of necessarily a threat to a community and to people in a community who traditionally been excluded from wealth building opportunities, really about creating a way for people in a community like Echo Park to be able to participate as primary financial stakeholders alongside these existent flows of capital and sort of actors who are shaping neighborhoods like Echo Park at scale already. And so we really sort of view it as an opportunity for a radical realignment of interests between people and communities who are traditionally excluded from wealth building opportunities because homeownership is so out of reach, and some of the actors within the capital markets who are I think genuinely looking for ways to be radically aligned with local communities and earn sort of generally market rate returns. Priyanka, I think you may be muted.
That's great. You said it's a way for people to participate as primary financial stakeholders. Justin, there are other models in the market. So on the spectrum of co-op to rent versus own housing paradigms, where do you think this NICO model falls for you? And what do you see as potential impacts or implications for the model for cities?
Yes, thank you, Priyanka and Max. And I put a link in the chat, actually, and it's some really great article that Brookings put together, Brookings Research, that asks this question: how can states empower local ownership for a just recovery? And so when you think about different models that are used in cities, and with the sort of the paradigm of real estate investment that's been a vehicle for the power of capital, and frankly, the power of an increasingly narrow few number of people, we have to think about what are the other models and alternate models that we can think about empowerment, frankly. And so if we think about the sort of the mechanisms of control that we see with really challenging what does ownership even mean and what does it look like, right? So there's the kind of the paradigm of kind of almost colonial attitude that someone with power and agency says this square of land has value and it's going to be controlled in a certain form and format to advantage people that have privilege or power, that we have to start thinking about what other models for that will be. And so we all know the kind of the dominant model, which is sort of you have to have access to money in order to have access to space, and in order to have access to space in a long term and in a sustainable way, you have to continue to have access to money, right? That's kind of how things work, and that people with more money can displace you. What NICO does, this idea of a benefit corp investment model and ownership model, right? We have to put them together. It's investment and ownership, creates a different model for governance that really opens up some new possibilities for how we talk about how we own and control space. And so there are a number of different tools that we see in cities. A big one that gets a lot of interest, and for good reason, are things like community land trusts or different cooperative models that have been around for a long time. But there are some of those models that can work successfully in some places, but they don't always necessarily work for all contexts and for all markets. And so the idea of expanding the different tools and strategies that we use to see new models for investment and new models of ownership and control, I think are a good thing. And so if we think about how this expands to kind of finding new models for cities, I think having more tools will allow cities to really adapt and right-size how growth, how development, how change, and how preservation, as important preservation, can happen in cities and communities. And so if we look at the kind of the power of governance, right? Who gets to own and control spaces? Who gets to make decisions as things are changing in a community. I think new models are going to be important, that we connect the idea of ownership with governance in different ways.
That's amazing. The idea of governance and how it can be connected to ownership, or like the idea of ownership and social equity. Helen, like that also speaks to the role of such models in a community. You worked at the intersection of community development and social equity for over a decade in LA, and LA Mars has roots near Echo Park. Nico is not your typical actor, neither a community-based organization or a community practitioner. What do you see Nico's role in the community, and to the point that Justin talks about, to the governance?
Thank you. I think Justin laid it out so well. I think besides the potential for wealth building that Max talked about, which is very exciting in itself as something that Nico is trying to figure out, I think two other elements that I want to lift up is the idea of who are the landowners in a community. And in Los Angeles, and especially in Echo Park area, we have seen a lot of competition for properties, and oftentimes without kind of strong rent control or rent stabilization laws, it means that a lot of renters who are dealing with new property owners might get evicted. And what's amazing about Nico and their 3 assets that they started with is the idea that they bought rent stabilized buildings, and they're keeping their tenants in there, keeping their rents at the rate that they've been paying, which is below market rate. And Nico is a B Corp and still making it work. So I think that is so exciting, because throughout LA, what we see is a lot of property owners who are purchasing assets like what Nico has started off with, but what they're doing is redeveloping. They're kicking out their tenants. And I think the potential for more Nicos in community development is an incredible tool, just given how the market incentivizes the highest and best use and the highest return on tenancy. So I think in terms of community development, like it would be amazing if there were more neighborhood REITs who are buying properties and actually keeping tenants, especially working class, long-term tenants who are paying below market rate and still making it financially work out. And I think that is an incredible potential of the Nico model that I'm interested in seeing kind of be proliferated throughout the community development field. I think the second element of what is interesting is in terms of ownership. I think to Justin's point of governance, today in the community development space, you have a lot of nonprofit community development corporations who are buying property and really reliant on a type of financing, new market tax credits, low-income housing tax credits. And we all know that those are it's very technical, it's very long, it's really hard to put together. And the time it takes to kind of acquire a piece of property, develop it so it becomes a community serving use is something that is really hard. And I think Nico's financing makes it easier and faster to be able to compete with the private market for owning and purchasing property that has more than a goal of having the highest return for investors. And I think that as a financing model, it's really interesting to look at what can the larger community development space learn from it. And I'm eager to see Nico kind of continue the mixed use of its tenants, not just residents, but then also commercial actors and perhaps community space down the road. So I think as a player in Echo Park, there is this incredible opportunity to be part of the community fabric, but then also as an entity that is demonstrating an alternative to typical community development investment. It's also exciting to see how Nico's work could inspire other community development practitioners to do something where we can learn something from its financing and its ownership and its acquisition strategies.
Thank you, Helen. Respecting the legacy of the tenants that have lived there for such a long time, and not relying just on the financing mechanism that exists in the market, but to come up with new, definitely speaks to the benefits of this model. But I think the important question there is also accountability. And to that, Megan, I would ask you, 3x3 has been working with Nico to develop its social impact and governance framework. Where do you see opportunities for building engagement and accountability into this model?
So I'll talk a little bit about how engagement and accountability was factored into the model. And I'll start by the hypothesis that Nico had when we first started working with them around what they called neighboring, which is the idea that if more people have a financial stake or skin in the game in their neighborhood, does it make people, residents, act and can it foster more cohesion? So with that lens in mind, engagement was something that we factored into the early design of the model itself, working hand in hand with Nico to do an early stage outreach of qualitative research, really, interviews in 2 different places to try to really understand how do we make it culturally reflecting needs of potential resident investors. And so we wanted to make sure that our outreach efforts early on were representative of the different types of stakeholders that would be, incorporated into the model. And one of the main things that we heard from this was, this sounds great, but who is Nico, and are they going to be safeguards or good stewards of my investment? And this is really important for lower income residents for whom it's not so easy to depart from, $100 to buy into a share of this. So given Nico is at the end of the day kind of a financial vehicle or instrument, albeit one rooted in real assets, we realized through this that trust was a really, really important layer to this. And the other thing is that Nico is not a nonprofit, and it raises a larger question about how private actors, especially those in real estate, operate within and are accountable to the communities in which they're working in. So we knew accountability was really important here, especially for a model that's so reliant on trust. And while accountability might be baked into the model for shareholders, what about other stakeholders? So what we've been doing with Nico is to integrate ongoing learning and evaluation into their sort of core practice and standard business processes. So we're calling this kind of product, I guess, or this thing, the synthesis framework, which views ongoing evaluation from data collection to internal processing to external feedback loops as an ongoing conversation between Nico and its stakeholders. And based on early exercises that we did to map out their theory of change for social impacts, and also a social return on investment analysis where we speculatively mapped out potential impacts, both positive and negative, on different types of stakeholders in order to not only know how to adjust for those, but also how to make sure that we're measuring for those. This framework really measures everything from conventional business and operational metrics to resident and stakeholder preferences to also impact metrics that include stewardship and trust, not only between residents and Nico, but also resident to resident, neighbor to neighbor. This is important so that Nico itself knows whether the model is working in the way it was envisioned to work. But also transparency being another important part of accountability. We wanted to factor in reporting and feedback loops to make sure that there was an ongoing dialogue and it's just not one-way communication that's happening. The idea is that engagement doesn't just happen once, but it's over time, and it informs the operations, management, and different aspects of the REIT on an ongoing basis, which then opens, of course, the question about who gets to shape certain decisions. And so that's one thing that we are really trying to pin down now, is how Nico operationalizes its governance framework. and what it's really legally allowed to do, being a public offering that's bound to certain regulations. And I think that Nico right now is at a moment where the rubber really meets the road, and there's still a lot to learn. But what I think is that it's setting an important precedent. And I don't want to equate Nico to what's happening in other spaces that we deem kind of urban planning spaces like mobility. But if you see Nico as a potentially kind of disruptive private actor who could be operating by the move fast and break things playbook, then I think Nico's model of accountability and engagement could provide an alternative playbook for other private operators acting within the public sphere. And I think that's just really important when we're looking at new innovative models. It's kind of like who is the owner of it, or who is the sponsor of it, and sort of to whom are they accountable?
Thank you.
And maybe just to add, one sort of thing to what Megan just said, just structurally, instead of talking about our financial model or our governance model, maybe it would be helpful to just give sort of 30 seconds on what our model actually is. So Nico Echo Park is a public non-traded REIT, which means that we are regulated by the SEC, but our shares aren't listed on an exchange. And so, we're, as far as we know, the first of, we hope, many neighborhood REITs. And we're also the first, as far as we know, housing REIT to organize as a benefit corporation. And what that means is that at a DNA level for our company, at our charter level, the management and the board of directors has a legal responsibility not to maximize shareholder value, which is sort of the ethos and DNA of most companies. But instead, as a benefit corporation, that definition of success is expanded, and we have a legal responsibility to balance the financial returns to shareholders, so we're still a for-profit entity, with the social and environmental impact of our business on stakeholders, right? So on a group of people beyond just shareholders. And this model, this ethos is sometimes called stakeholder capitalism. There's sort of new words. There's a lot of companies that are sort of shifting more towards this framework, which we're obviously incredibly supportive of and proud to sort of be a part of. But for sort of real estate, market-oriented real estate in particular, it's a pretty small group of folks who are sort of working to build around this type of model. And so, it's really sort of a hybrid of, the type of work that you might traditionally see in a not-for-profit or a community-based organization type of, ethos, with really sort of market-oriented capital structure, and typically access to market-oriented capital, right? And so to sort of take it a step further, to the comment before about many sort of neighborhood-oriented, typically nonprofit community development actors are doing some form of subsidized financing, low-income housing tax credits or new markets tax credits. We finance these acquisitions with a combination of equity that is seeking a generally market type of return. Not to say get me the absolute maximum return. Certainly our investors understand that what we're managing to here is not absolute profit maximization, but we've also used pretty conventional long-term fixed rate debt from Fannie Mae, Freddie Mac. Two of our assets now are financed with Fannie fixed rate 10-year mortgages. And I think it was very important for us in the structure to try and create a way for these sort of really, like we like to say, boring. We say boring as much as we can, for these sort of boring market types of capital, Fannie Mae and real estate equity, to be sort of balanced with this impact framework and our larger objectives, which are financial, social, environmental. And I think a lot of what Megan was really talking about is really sort of the guts of how you navigate that balance and what structures you have in place and how you think about it. And for me, coming from a more traditional background in commercial real estate investment development, I mean, it was like the process of building Nico and the process of trying to get this model into the world was like you know, it's like learning a whole new language, right? Learning a whole new way of thinking, and actually, you know, working with, you know, Meghan, Priyanka, Justin, Helen, you know, lots of others to sort of figure out, okay, like what can we take from what, you know, from the market-oriented real estate world? What can we take from, you know, some nonprofit models? What can we take, like, and how do we sort of make it all work together in this new way that is, you know, trying to, you know, speak to, you know, how we start to engage with some of these challenges and opportunities at the type of scale that we believe really only sort of, you know, generally market-oriented capital can sort of deliver. And so the choice to be, you know, very focused on how we make this work from market-oriented source of capital is very much trying to address how we, you know, scale, how we can be part of developing something that has the potential, you know, for large scale, because, you know, the housing market's the largest segment of the U.S. economy. These problems are being felt in neighborhoods across the country. This racial wealth gap, this general wealth gap, this fetishization of traditional homeownership and all the regulation and tax code that sort of goes into that. And these are huge, huge things, right? And so, you know, we want to make sure that market-oriented capital can, you know, be a part of the solution so that the solution can start to, you know, be relevant to the scale of the systems that are in play.
Thank you for that, Max. The importance of having a market-oriented model, and like I think what you said also re-emphasized, it's not just coming up with a hybrid model, but like throughout the process, from acquisition to like coming up with the model to then Meghan's point of coming up with a framework that could bring in not just quantitative metrics, but also a way to measure stewardship and trust, and then move on to governance. Like it's a lot to handle. I want to follow up on that stream of thoughts and talk about the impact on community wealth building. To you, Max, given the historic exclusion of Black and Brown communities from home ownership and capital, and more recent trends of gentrifications, Nico raises a provocative question about who's included and who benefits from neighborhood change. And no, it's a tough question, but when you first started, did you see it as a community wealth building model? And how would you put that in this larger context of exclusion of people of color?
Yeah, it's a great question. You know, so I would say when we started it, we did sort of see it as a community wealth building model. I think that, you know, I think that's sort of one of the core, you know, impacts that we're really seeking to deliver through the model. You know, the question about, you know, so I would say very candidly, you know, when we started working on Nico, we were really not sure how we were going to engage with this word gentrification, right? So we put a lot of thought into it, and, you know, I think we have to acknowledge, first of all, that, you know, the real estate industry, you know, has a terrible reputation, you know, in communities, and that's because, in large part, and that's not to say every actor within the real estate industry is a bad actor. I don't believe that, but I think the industry as a whole has operated in a way that is so disaligned and so typically extractive that, you know, there's a huge amount of distrust. You know, anytime real estate or investment sort of comes up, like people, you know, in neighborhoods like Echo Park, I think are rightfully, you know, sort of like, you know, at the very least, sort of waiting to see what that means, but typically I think have sort of a negative perception of it, and I think that's like pretty fair, right? And so, you know, I think we've come, like, our understanding of gentrification is, you know, it's specific to us. I think that one of the challenges with that word is that it means really different things to really different people. It's a really personal thing, and it has, you know, a huge range of meanings that are typically like pretty personal to folks, right? And so there's no one meaning. You know, you ask 10 people, it's going to be 10 sort of different things. But I think some of the themes are pretty common, right? And so we think about, some of the negative impacts that are associated with gentrification, like displacement, right? And, you know, we make a commitment, you know, through owning initially rent stabilized properties and, you know, our sort of commitment to our residents, and one of our focus areas on neighborhood stability and housing security, to really be extremely thoughtful and careful with respect to anything that could sort of lead to displacement or even a reduction of housing security for folks, right? And so we take that, you know, responsibility incredibly seriously. I think that some of our, you know, actions so far, including a rent assistance program, which we're really proud of, that we launched very early in the pandemic, you know, I think sort of speaks to that commitment to housing security and stability. And I would say the other, you know, sort of big lens that we understand gentrification through is, you know, not the sort of necessary judgment on some of the symptoms of it, right? Because I think the history of neighborhoods and the history of cities is about change and sort of constant change and evolution, right? And so trying not to have judgment on that itself, but instead say, who's benefiting, right? Who's included, who's excluded, and how do we shift it so that this could, right? Because that's a really rough, you know, if you're living long-term resident, you're living in a neighborhood, you're a renter, you're not a homeowner, and the neighborhood is changing around you, and all of this wealth is being created, and all of this investment is happening, and it's creating, you know, a population shift, and it's, you know, your sort of home is being like appropriated, it's sort of taken from you, right? And that's a really rough feeling. But I think that one element of why that's so rough is that, you know, you're not typically able to participate, right? If you're not able to be a homeowner or a small business owner, right? Which are capital intensive things, especially in expensive neighborhoods like Echo Park and, you know, neighborhoods in New York. And so we're really focused on trying to say, how do we create a model where everyone within a community has an opportunity to build wealth in a fair, flexible, incremental way? And so, like, you know, that feels like a bit salesy, but like one example we like to use is like, you know, if you could go back in time, which of course, you know, we can't, but if we could go back 20 years and say, okay, Nico Echo Park is going to launch in Echo Park 20 years ago, right? And people in Echo Park have the opportunity to start building wealth, you know, invest, you know, I don't know what the inflation adjusted $100 for 20 years ago, but, you know, start investing at an affordable thing that's not a down payment, doesn't require a mortgage, set up a recurring investment every month, $10 a month, $20 a month, or $100 a month, and actually build wealth in ownership for the last 20 years. I believe that the amount of agency and sort of like, you know, like wealth creates the opportunity for people to have choices, right? And to make decisions for themselves and not be sort of forced into leaving or staying or one line of action, right? And so the idea is like, we can't go back in time, but that would be a powerful thing if that option was available to folks 20 years ago. And so we're sort of saying, look, we got to draw a line in the sand and put this model out now, and, you know, hopefully others will do similar. And, you know, our vision is that we think that everybody within a community should be able to be part of the wealth that's created, you know, in communities, part of community wealth. And we're really trying to create a way to address gentrification in particular through this lens of inclusion, exclusion, and trying to sort of break the part of like how many people are really excluded from being able to participate in a responsible way.
Right. I wanted to jump in quickly. I put another link in the chat. I'm a big Andre Perry fan. You know, this conversation about gentrification needs to be connected to the larger systems that we all know that urban planning and policy and especially kind of capital have had in shaping some of our context in cities. So that includes things like redlining, blockbusting, contract lending, all of these things that hopefully everybody in this audience knows pretty well. And there has been this long-term and anti-Black racist systemic devaluation of Black spaces and Black communities and Black people. And, thinking about the mechanisms by which gentrification is sort of operating is connected directly to that kind of framework and sort of systems of devaluation of people and communities. And so, we keep returning to this idea about models and its impact on cities. The mechanics for how property is owned is important, but also kind of how its value is maintained is also important. So the sort of the connection between the tangible asset, the buildings, their maintenance and care, also is connected to another kind of valuing that's equally important, but I think links to some of the things that Meghan and Helen were talking about, which is this more amorphous thing, which is kind of community, connectivity, participation, just sort of general connection that people have to their spaces. And so thinking about how our models are really sort of community models to address head on and directly even this concept of how we value property and space. And so, the NICO model, neighborhood investment company, the neighborhood, kind of the unit of place, and having that connectivity of who the stakeholders are, being connected by place, by community, by geography is very, very important. So when we talk about gentrification pressures, yes, there's obviously rich white people with money coming in and buying a vacant or lower, investment property and fixing it up for rich people. But let's be real, there are also Black people that they say, you're going to give me how much for my house? I'm gone, right? So there are kind of multiple things that we have to sort of understand the full systems and to counteract this idea of the devaluing of Black communities in particular.
Thank you for that, Justin. It's interesting, for this new modes, we've discussed how we need to be aware of the context first and the mechanics of how the value of the property is maintained and what has been mechanics of exclusion in the past, to your point, Justin. And then Max, the importance of housing security and how the model incentivizes people who live in rent stabilized unit to stay there. And even with the community rent assistance program that you implemented during the pandemic, how that incentivized people and gave housing security to people at a moment of crisis. And then to Helen's and Meghan's points of there being accountability and there being governance, and to each one of your points of how this needs to be connected to a place and how everyone comes together. There is a sense of ownership, there's a sense of belongingness, and that along with maintenance and property and different themes create value for this asset, which is what, to Max's points, actually leads to a long-term financial gain for the people who invest in this and give wealth back to where it was created. To that point, Meghan, revisiting your work with the social impact framework, where all of this gets tied together, where do you see opportunities within this model for new modes of economic justice?
Yeah, right. So thanks for summarizing that, Priyanka, and thanks for your comments, Justin. I think that given the longstanding racial wealth gap and neighborhood disenfranchisement, so I'll start with saying NICO is offering a lower barrier of entry that creates a pathway for people of color and low-income people to generate wealth in a hyper-local way. Yes, that is true. But to me, when we think about this through that lens of gentrification, it's actually an economic and restorative justice question. So by enabling longstanding residents of a rapidly appreciating community to participate in the economic uptick of its growth is not only opening up just any economic opportunity, but it's actually opening up one that has robbed those communities of the value they themselves have created in really intangible ways. And I also just want to note that there are a couple sessions tomorrow that explore this, namely, so I'm going to shout them out, the people-powered currency to build community resilience and health, gender, jobs, and justice in the care economy sessions. I'll explore this concept of like these intangible assets and value. And when we did our early stage research, we asked people what they looked for when choosing a neighborhood. And this is, of course, for people who have that choice. And the responses were often, and I'm going to air quote this, but character and authenticity. And so these are things that are hard to identify tangibly, but are, really valuable to people, people who longstanding residents of neighborhoods, but then also, newcomers to neighborhoods. So in a way, NICO offers a vehicle to redistribute that value that's created by communities of color back to them. And it's about having these communities have the option to reclaim that stake. And so with that, we explored a couple pathways through NICO's theory of change that I'll talk to three of them. But the first is the pathway to longer-term community wealth building and generational wealth transfer. So when NICO was launching in Echo Park, we heard stories about what motivates individuals to save, and often what comes up is investment in their children and their children's education. And so it offers a chance to begin to close those localized racial wealth gaps. But also there are a lot of positive spillover effects when it comes to financial security that have to do with broader well-being that I'm not going to get into too much detail about, but it brings me to the second point or pathway, which is to neighborhood vitality. And I say this broadly, but what we really meant by that is neighborhood diversity and stability. And so this includes that socioeconomic diversity is sustained over time, that there's long-term tenant security. These are the things that kind of Helen was speaking to, but also that there's greater acknowledgement of local culture and locally owned businesses as sources of value. And the third is the pathway to distributed power and stakeholder alignment. So this goes beyond just the idea that people are able to buy into or have access to wealth generation or vehicles for wealth generation, but what that does, what that shift does, and how it changes your perception of entitlement, but also your real kind of access to this. And so it's perhaps an ideal, but if you were to look at NICO at scale, this is one where neighborhood development is driven in large part by stakeholders' desires and direct input, where new amenities serve the needs and desires of a greater share of residents and not just the few, and where residents, and this goes back to what Justin was speaking to, but where residents are more connected to each other and there's a greater sense of belonging. And so if we look at the reality of the past couple of decades and the changes that have been happening in communities of color as a result of external investment and new development, long-standing residents should also have the opportunity to financially benefit from those changes. And we can talk about other strategies for addressing the negative impacts of gentrification, such as like housing policies or reverse gentrification. But this shouldn't be viewed, like NICO shouldn't be viewed as a silver bullet. But it is, I think, one avenue for residents to have real ownership in the future direction of their neighborhood.
Thanks, Megan. We have some great questions in the chat. I would ask one last question before I open it to the audience and field those questions. To all the people on the panel, what lessons, learning, and opportunity does the NICO model have for the community development field at large and for cities more broadly?
Well, I'll jump in, and I don't know if I'm going to steal Helen thunder, but the post that she put in the chat, which was about NICO's rent assistance program. So Something that's important about models is they have to be tested. And Nico just started and had a big test from the beginning. Soon after the sort of the company, the pilot Nico and Echo Park formed, we had the COVID-19 pandemic hit, and of course all of the simultaneous social unrest that led to a lot of instability and kind of difficulty. And so the company's model, this sort of premise of the benefit corp, which all sounds great on paper, you know, people do TED Talks and stuff about it. There was a real life test. What's going to happen when there's an incredible stress on a community, and how it reconciles with this model, which looks at how ownership and governance and decision making will occur. And so some of the outcome from that was this community stability program that looked at things like rental assistance for these long-term residents that were impacted by the health and economic crisis, but thought about it in a more comprehensive way that also looked at not only, you know, yes, we'll help you out with your rent, but we're going to create opportunities for greater connectivity and ownership and having kind of shares, kind of in the broader sense, a share in this community and what was being built. So encourage you to take a look at that link, but you know, looking at how, as we're developing new models, that we have to find out how they perform and adapt in times of stress and duress are really important. I think Nico has been doing that.
So we're thinking the exact same thing, but this gives me an opportunity to talk about what I think is another exciting element for us to all kind of support and see how it monitors and grows, is that, you know, Nico is broadly neighborhood-based, being in the Echo Park and the surrounding area, but who has the ability to invest and to kind of contribute and participate in the community wealth building is not limited. So it actually really speaks to this distinction between, you know, typically in the community development space, you're focused on a geography and who your people are, your investors, your stakeholders are within that geography. And I think the Nico model provides an opportunity for a larger collective of people, not only to invest in community wealth building beyond the immediate neighborhood, but the reverse, which is, if we're really thinking about potential ways to mitigate displacement, which I think is probably one of the biggest challenges of gentrification, is that wouldn't it be great if all the tenants who are in buildings that may be seen as higher and better use could actually have property owners like a Nico who's going to invest in a rent like a rent assistance program because of the pandemic, because it's the right thing to do, and because they're going to figure out how to financially make that possible. I think about how it's unfortunate how there's actually sadly more property owners of this size that aren't doing that, and how do we actually have more property owners do exactly that? Think about not just their return, but then also think about their tenants and not being mandated or required to do so by law, which is currently how a lot of interactions between your landlord and tenants are. So I think that is interesting to think about. Like right now, you know, Nico only has 3 buildings, but 3 buildings where the who is seen as their stakeholders are the tenants there. And so what does it mean for tenants that are not part of Nico's assets, and how could future purchases, future acquisitions think about who are those tenants and what are their responsibilities and commitment to that, in this constant tension between real estate as a, you know, as a transaction, but us saying that no, it could be more than that, and it could actually be a way to think about greater social justice, racial justice, and inclusivity in the way that our rules have, you know, created a system of planning that has been exclusive. So I also echo Justin's points in the chat box of great links for that. And I'm excited to see how Nico continues to mature and grow into all the possibilities of that work.
I'll chime in there. I think that my sense are very similar to both Justin's and Helen's. And I think for me, putting on my planner hat about what kind of planners can learn, it really centers on engagement, power sharing, and also democracy building. And I think Helen mentioned a really good point that there's still a lot to learn and a lot to be learned about NECO and how it plays out in Echo Park. But as a community-centered designer that focuses a lot about engagement, we see, a lot of planners thinking about engagement on a case-by-case basis or a project basis, and we also have to think about it in that lens as well. And without necessarily thinking about what it means for the communities in which we work and what happens after we leave. And so for me, this is an exploration into what democratic and distributed decision-making could look like that is really embedded within neighborhoods. It's about really strengthening and flexing that infrastructure and reframing what it means to be a resident in a community. And it's about sharing power in a more genuine way than some of the systems that we currently have in place, especially here in New York. And it opens up questions for me about what this might look like applied elsewhere, and not just in a geographic sense, but also like what if other hosts were to adopt similar engagement models, like what Helen was mentioning earlier on, other community-based organizations, for example, or what this could be applied to kind of housing or real estate, what other assets and communities are maybe currently private, but maybe they shouldn't be. And so for me, it's opening up a lot of questions about where there's opportunities to scale this sort of decentralized model. Max, you're on mute.
Max, you're mute.
Sorry. Okay. So yeah, I might just add that this is going to take, from my perspective, we're not going to know what this is or can be for 5 years or 10 years. This is not something that is fully formed, and it's not fully, it's built to adapt and evolve and to sort of learn from stakeholders. And we really, one of the things I'm proudest of is the extent to which we're sort of coming into it, acknowledging that this is, we don't totally know what it is yet, and giving it the space to become what it needs to be and what it should be and what it can be. And so I think that, I certainly feel incredibly lucky to have, such an incredible team of advisors and supporters and board members and people who are, really working with us to put this model into practice. But it's going to be a long-term thing to figure out what it is and to sort of learn what it is. And it's we're quite excited for that journey. And so I would just sort of add that.
Mm-hmm. I think Scott Allen has a question that kind of follow-ups on that. So does Rachel Webster. What criteria do you use to prioritize local government funding to raise up neighborhoods in need? New city funds in my community are focused on investment in home ownership, that is wealth building, but wrestling with how to be strategic without perpetuating the history of pitting neighborhoods against each other. And Rachel Webster, similar question, what legislative changes would foster the success of this model? So I think there are things beyond the scope of this model, but where do you as a panel think, how do you avoid neighborhoods pitting against each other, and how do you incentivize legislative changes?
I'll start by saying I serve on the planning commission for the city of Los Angeles, and there's always this tension between what is good for a community and the tension between what makes sense for a region and for the city. So I think that as much as we want to be thoughtful about the changes in each individual neighborhood and what makes sense as it relates to density and use and rents, issues of gentrification and displacement are a regional issue as well. And you can't solve a housing crisis just by putting, affordable housing all in one area. So I think about, similarly for Nico, this tension between neighborhood, but that, we can't say Nico's going to solve everything, because if they're one player of many against many other players. So it's thinking about how can, in my opinion, Nico kind of broaden its umbrella, its canopy, so that there are other players who are like, can we learn from this element of what Nico's doing and not have to reinvent the wheel, which I'm sure Max can talk about how the complexity of actually just being a REIT and a B corporation. Both of those are two very intense technical things. And I think to the extent that government and policy actually thinks about where they invest their resources. In California, there's a growing movement to think about how can there be investments in community land trusts? How can land that's owned by public government actually be first offered to community serving uses? And I would put Nico in that category rather than, say, a fully private property owner who are going to have different metrics of success. And I think as policy becomes kind of more potentially progressive during this time, that we should think about how can we invest funding, how can we invest like the resources that government has to think about centering actually the needs of communities of color, of especially communities that have actually been excluded from these decisions of land use and planning, which is how we got to where we are today.
Mhm.
I was just going to add a quick thing, which is to say there's an important shift that I think we need to talk about with Nico or models like Nico, which is the shift from individual or a family unit wealth building to a community wealth building frame. And it's a difficult shift because so much of American everything is like, you get your family and your dog and your car, and suburb is still a dominant model. Even if you live in a city, that's still an image of success and wealth. And this really is trying to kind of challenge and broaden and flatten kind of what wealth building looks like. And so I think, like Max said, it's a long-term project because we as a society are not necessarily there, but I think more and more people are starting to understand it.
Mm-hmm. Mm-hmm. There's another interesting question by Asiya Thompson, and I see Jeffrey, you highlighted that question as well. I would like some clarity around what it means to redistribute the value of neighborhoods created through character and authenticity. Could this be another form of commodifying Black culture?
I can speak to, I think it kind of gets at something I was trying to make, which is not saying that Nico should be commodifying Black culture per se, but that Black culture is commodified through the gentrification process, perhaps already. And so in what ways can we give opportunities for communities of color and Black communities to sort of reclaim that for themselves?
Would anyone else?
Yeah, I mean, I'll add, I live in Harlem, so this is like, my environs is exactly this issue of commodifying Black culture and Black spaces, and the sort of misalignment and abuse of valuing culture. And so I'm going to just keep saying governance again, but the idea of how that process even happens, who gets a say over things like the messaging, right, for how a project happens, for when a development comes in and we're talking about who has the access to the commercial spaces, what types of businesses are there, who owns those businesses. There are so many different sort of decisions that are made in the kind of the ownership and development of a neighborhood or even a building in a neighborhood, that we have to think about those power dynamics that exist in terms of who owns the culture, and is there sort of a responsible level of authenticity, for lack of a better word, when projects are happening. So, we have to accept that this commodification happens. It's there, it has value, because guess what? Black people are awesome, we do cool stuff, and it's valuable. But we have to make sure that Black people and it's not only in Black communities, there are many different kinds of communities that benefit from it. We see this with artists, and we see it with various types of immigrant communities, that there is this incredible value that is real and it exists. And we just want to make sure that the people that are producing that value or who are able to benefit from the value.
Thanks, Justin. We are towards the close of the event, and there is a closing remark at 2:45, but perhaps we can field 2 more questions. Tara Bramford asked, and maybe Max, this is directed to you, has money for maintenance, for example, new roof, a challenge that has been a big problem for our housing trust with below market rents? And another, not same, but a question that might be directed towards you is, what kind of revenues do you envision? Is it actually enough to close the local wealth gap? If so, by how much?
Great. Fantastic questions. So I would say on the first one, part of the reason we chose to launch this model in LA is because there is a really broad rent stabilization program here. It's called the RSO program, Rent Stabilization Ordinance. And what that means in part is that the regulation around rents, which result in significant number of the units being at below market rate rents, are sort of priced into the asset value, right? So that's really important from a return standpoint. And so the properties that we currently own are all getting, are all sort of underwriting to a market rate of return for this type of asset. And part of what is sort of part of the feature of this asset is this rent stabilization program. And so the answer is that, repairs, maintenance, all that stuff, the projects are high enough returning that is not an issue for this type of asset. I'm sorry, Priyanka, could you just remind me of the second question?
So we have Tiffany and Taylor, sorry, she says, unfortunately, we are at time and all sessions must end. We'll just type in an email. Feel free to ask questions through that email. But we'll have to end this session. Sorry for that, Max, and sorry.
Thank you everybody for joining, and thanks to my fellow panelists for doing this. Really appreciate it.
Great. Thanks, everybody. Thank you for joining us.
Thank you, everyone. Thank you, Priyanka.
Thank you.
That was great, everyone. Yeah. Bye.
Bye.
Bye.